Hello and welcome to the Forum. Every week, we take no more than 15 minutes to discuss the 3 highest conviction ideas surfaced across the Smart Karma network, cutting through the noise and helping you zero in on what truly matters most. The live forum and Q&A session are exclusively available to Smart Karma Plus subscribers. You can always revisit previous episodes on this YouTube channel. Without further ado, let's dive into this week's ideas.
Good evening, ladies and gentlemen, and welcome to the weekly forum from Smart Karma. Just a reminder, the forum is a high-impact weekly live webinar which is exclusive for Smart Karma Plus subscribers. We use this opportunity to discuss some of the best, highest conviction insights as surfaced across the network. A quick disclaimer, the forum is meant purely for informational purposes. It does not constitute investment advice. It is the opinion not of Smart Karma, but that of our insight providers. And lastly, Chatham House rule applies. In our most recent forums last week, we took a look at PC Partners, which is a Hong Kong listed small cap that is about to display what we think would be a record earnings season with over 30%, maybe even 40% dividend yield. We looked at a leading Chinese renewable energy company called Longyuan into its IPO on the A-share market. We also studied a Singapore-listed agri-tech business called Olam, where we see significant value to be unlocked over the course of the next 12 months. In case you've missed our previous forums, you can head over to our channel on YouTube, where you can find video recordings. You can also share these with your friends and consume at your own pace. Today, we will be looking at the following 3 ideas. First, we will look at Singapore-listed REX International, which is a beneficiary of the current high oil price environment. We will move on to Water Oasis, which is a Hong Kong-listed medical aesthetics chain. And lastly, we will explore a theme of Chinese real estate and why recent developments are so pertinent. Let's kick things off with REX International. The ticker is REXI-SP. The market cap is just over $300 million, and this is a stock that trades about $4 million a day. For those of you who have followed the forum over the last few months, you will be familiar with REX because we've profiled it before. In fact, this is a name that has done extremely well. I think from the time when Nicholas van Broekhoven first started writing on it, it is up at least 50%, if not more. Let's take a look at the thesis and why we continue to really like REX at the moment. First of all, what is REX? It is an oil and gas E&P company, exploration and production. And they have concessions in Norway, UAE, Oman, and in the US. This is an unusual stock to be listed in Singapore, where we do not see too many commodity names, let alone oil and gas exploration names. It's also worth noting that REX is actually listed on the small companies board, which is the Catalyst board. Nick continues to like REX a lot because he expects the second half results, which would be announced sometime later in February, will show a very, very big inflection as the Norwegian Brage oil fields start to contribute to its earnings. Nick assumes very conservative numbers, but even on these numbers, he sees a dividend payout ratio which could result in almost 10% dividend yield, not to mention stupendous profit growth. There are other interesting things happening here. REX has filed to move from the Catalyst board to the main board. And in fact, that approval came out overnight. Despite very, very shaky markets in Asia today, the stock is actually up 4%. We think this is a catalyst that will lead to more institutional discovery for the name, which will be helped by the upcoming earnings season and the dividend payout ratios. Moving on to the next idea today, we are going to look at a small cap in Hong Kong called Water Oasis. This is a $150 million market cap It trades just under $500,000 a day, so it's very much in the small companies range. You will also notice that the stock had a very big pop quite recently at the start of the year. So it's one of the names that's actually done quite well already year to date. But we will take a closer look at why we think there's a lot more upside here. So Water Oasis, for those of you who might not have heard before, is an online, sorry, not online, but it is an offline retailer that provides beauty services and products mostly in Hong Kong, but to a smaller extent in Macau and PRC. It's a very, very cheap name, which has a very high net cash balance, accounting to about 31% of the market cap. And that is even after the acquisitions it made in the first half last year and the big dividend it paid out. Another thing that's very unique with the Water Oasis is that this company continues to pay out over 80% of its income in the form of dividends. If you look at what that translates into based on the current share price, that's a forward yield of about 14% for a company that's growing 25 to 30% every single year, which means even if we put a conservative 10 times PE multiple, you're looking at almost 70% upside, having been up 50% right after the December results. These are names that are not covered on the street at all, and Smart Karma provides very unique, very differentiated, almost often the only research in the market. The third and final thing we'll explore today is a theme. It's a theme around Chinese real estate, and more specifically around why recent developments such as the M&A loans exclusion from 3 red lines is important. Li Tang is a China-focused research provider on the Smart Karma platform who actively covers this space from a strategy and policy standpoint. And that's become the only and most crucial way of looking at the real estate market in China. Let's look at this a little bit more closely. The 3 red lines were actually 3 key financial metrics that were introduced by policymakers in China all the way back in late 2020. These metrics were introduced to limit how much property developers could borrow. It was designed as a mechanism to limit the explosive growth in the market and essentially cool down some of the practices that were causing overheating. For most of 2021, the policy remained in place, which led to a decline in residential property prices and severe financial stress on the entire real estate chain, especially the property developers. Towards the end of 2021, we started to see policy makers relax their stance because much of that excess had now translated into defaults and a repricing of assets. One of the most important changes that was introduced was about 10 days ago, maybe slightly more, but earlier this year, when policymakers agreed to exclude any loans that were taken by developers for M&A purposes from the computation of the 3 red lines. Why is this important? Essentially, the government is giving stronger developers, especially government-linked developers, the ability to now borrow money from banks to buy out insolvent companies and their assets, which means that the government has, in a very, very clever way, signaled the start of a bailout. It has built a way for the strong to get stronger and consolidate out the weaker players. Now, this may or may not reduce the default risk around offshore bonds that the developers have, but it will most certainly protect the obligations that real estate developers have to property owners, and to a large extent also save banks who have loans outstanding. All in all, this is great news for state-backed developers such as COLI, and you can see how these stocks have actually surged to new annual highs at a time when private listed developers are making new lows. This asymmetry is at the heart of what Smart Karma loves to explore, the differentiation amongst companies based on real analysis and good research. And with that, we're at the end of today's forum. Once again, you can find recordings of previous forums on our YouTube channel, and you can also approach us on the platform with any questions using Smart Karma discussions. Thank you very much for your attendance, and we will see you not next week, but the week after. Next week, we are taking a break because of Chinese New Year. Thank you very much for your participation again. Bye-bye.
That's it for this week. You can find more ideas like the ones we discussed today on demand on our YouTube channel. Remember to subscribe and hit the notification button. If you like these ideas, spread the word. Tell a fellow investor about Smart Karma Plus and follow us on social media. Just search for Smart Karma. And of course, don't forget to visit smartkarma.com for more independent, differentiated investment insights. Thanks for watching and see you next week.